Hello and welcome to this information session. We're going to discuss bad debt expense minimization techniques. So if you look in your video description, you will find the 6 techniques that I have posted and I will be talking about. First technique in bad debt expense minimization is have a customer fill a pre-authorization credit form. In that form, you should collect relevant information such as I listed, point A, legal name and operating name of the business. Point B, they should give you an authorization. There should be like a statement that authorizes you to check their credit history or credit rating, and that will help you determine how much credit they shall be provided if they qualify for any credits according to your criteria. Point C, ask them for trade references and try to call these trade references and ask them how does this new potential customer how do they deal with them? Like, do they have credit problems? Do they default on their payments? Or anything that may raise an eyebrow. Also in the form, ask them for their business history, like the type of business they are doing, how long they have been in the business, and whether they have the potential to stay in the business or not. Point F, ask for their financial statements. So from their financial statements, you will be able to determine their liquidity issues and see their debt to equity issues, and you can try to see whether they should be qualified to get credit. And also ask them for their banking information so that you would know with which bank they are dealing with. So after filling this form, you can make an assessment on whether to grant them a credit and how much the credit should be. Second technique in bad debt expense minimization is once the service and or goods are delivered to the customers, invoice right away and don't delay invoicing, and try to avoid any mistakes or any problem that can be used as an excuse not to pay you on time and to delay payment and keep negotiating and pretend that they don't understand what you're writing in the invoice. So try to make the invoice as clear as possible, as straightforward as possible, and on timely basis. Because if you delay invoicing, most likely they will forget, and it's going to be hard to convince them to pay invoices that are late. And on the invoice itself, specify the due date, the payment due date of that particular invoice. The third technique is to minimize your bad debt expense, ask them for down payments if you can. So if you ask them for a down payment of 50%, then your receivables will be less, and your bad debt accordingly will be less. Fourth point or fourth technique is make customer agree in writing, and I'm going to repeat that, agree in writing. They have to write that they accept any interest charged on overdue invoices. And when invoices are overdue, send a statement right away with the interest and specifying how much the interest on the outstanding invoices. So that will make customers pay you faster, and probably they will prioritize your invoices over other invoices that don't bear any interest on late payments, because most likely the interest will be 2% a month or 1.5% a month, and that will be, in most of the cases, less than the interest and operating loan that's offered. So they would rather borrow from the bank and pay you rather than finance themselves based on your invoices. The fifth technique in bad debt expense minimization is do not extend credit for those who do not pay. And also you should specify in your policies that no credit or no more sales shall be given to any customer who defaults on payments. So that will eliminate, because if they're likely not to pay you the first time, they're most likely not to pay you the second time. The sixth point, or the sixth technique, is once you receive a check from a customer, have it photocopied and keep it in your files before you go ahead and deposit the checks. Because if the check bounces and there are no money in your bank account, and you can't really get the check back from the bank because they will most likely send it to the customer branch. So to have a proof that this check is not cleared, you can send a copy to the customer, ask them to cancel that check and issue you a new one, because they're most likely not going to be able to reissue another one unless they know the check number, unless they know the amount on the check, the date on the check. So having a copy in your files will eliminate a lot of problems when it comes to bounced checks. So this takes us to this information, to the end of this information session. Just to summarize, in order to eliminate your bad debt expense, you have to have policies, and they should be applied and taken place, and they should be followed. Otherwise, if you get loosened on current sales, probably you'll get more sales, but at the same time, you'll probably get more bad debt expense. So it comes back to the strategy of the company. How much growth are they willing to take in the future versus how much risk they are willing to take against that growth step. So thank you very much for watching this video, and hopefully we'll see you in the next video, and have a good day.